The year is 2028. The quiet hum of the suburbs has been replaced by a deafening silence. For sale signs, weathered and faded, stand like tombstones in front of once cherished homes. This isn't a scene from a disaster movie. This is the aftermath of the Great Housing Correction. A crisis that reshaped our society and redefined the dream of homeownership. How did we get here? How did the foundation of our economy crumble so spectacularly? Today, we're going back in time to uncover the cracks that led to the collapse. It all began with what seemed like a golden era. In the early 2020s, the housing market was on fire. Low interest rates, a desire for more space fueled by the pandemic, and a widespread belief that property was a foolproof investment created a perfect storm. Bidding wars became the norm. Waiving inspections, a risky gamble, became a standard play. People stretched their finances to the absolute limit, driven by FOMO, the fear of missing out. Prices climbed at a dizzying pace, far outstripping wage growth. On the surface, it looked like prosperity. Homeowners saw their net worth skyrocket on paper. But beneath this glittering facade, a dangerous bubble was inflating. The question wasn't if it would pop, but when. The first tremors were subtle. In mid-2025, central banks, fighting persistent inflation, began a series of aggressive interest rate hikes. That rock-bottom mortgage rate you locked in? It was a distant memory. Suddenly, adjustable rate mortgages, which had seemed like a smart way to get a lower initial payment, became financial time bombs. Monthly payments for millions of homeowners began to soar, sometimes by hundreds, even thousands of dollars. The easy money that had fueled the buying frenzy was gone. The music, as they say, had stopped. For families who had bought at the peak, paying top dollar, the squeeze was immediate and brutal. As borrowing costs went up, demand for homes began to dry up. The once insatiable buyers vanished. Open houses, which used to have lines around the block, were now empty. Sellers who had hoped to cash in on the boom found themselves in a terrifying new reality. They lowered their prices, then lowered them again. But it was like trying to catch a falling knife. Each price drop fueled more panic, creating a vicious cycle. The market was no longer just correcting, it was in a freefall. The psychological shift was profound. The home, once a symbol of security and wealth, now felt like an anchor, dragging families down into a sea of debt. This is where the story takes a darker turn. As prices plummeted, a wave of homeowners found themselves underwater, owing more on their mortgages than their homes were worth. Imagine paying a $500,000 mortgage on a house now valued at $300,000. Walking away seemed like the only option for many. Foreclosures began to spike, flooding the market with even more inventory and pushing prices down further. Neighborhoods transformed overnight. Empty houses became magnets for neglect and crime, creating a blight that spread from street to street. The dream had become a nightmare. The ripple effects were devastating and reached every corner of the economy. The construction industry, a major source of jobs, ground to a halt. Half-finished developments became ghost towns. Layoffs swept through real estate agencies, mortgage lenders, and home improvement stores. Consumer spending tanked. When people feel poor because their biggest asset has lost value, they stop buying cars, they stop going on vacation, they stop eating out. This negative wealth effect triggered a full-blown recession. It was a stark reminder that the housing market isn't just about houses. It's the bedrock of the entire economic ecosystem. Governments and financial institutions scrambled to respond, but the damage was already done. They introduced bailout programs and foreclosure moratoriums, trying to put a floor under the collapsing market. These measures helped some, but for many it was too little, too late. The crisis exposed deep inequalities. Wealthier individuals and institutional investors who had cash on hand were able to swoop in and buy properties for pennies on the dollar, while average families lost everything. The gap between the haves and the have-nots widened dramatically, sowing seeds of social and political unrest. So, what lessons can we learn from this hypothetical collapse of 2028? First, the belief that house prices only go up is a dangerous myth. Markets are cyclical. What goes up can, and often does, come down. Second, financial literacy is not a luxury. It's a necessity. Understanding the risks of debt, variable interest rates, and over-leveraging is crucial for protecting yourself. We must be cautious of FOMO and herd mentality. Making the biggest financial decision of your life based on panic is a recipe for disaster. The crisis forced a national conversation about the very nature of housing. Should a home be treated purely as a speculative asset or as a fundamental human right? Looking around today, in our imagined 2028, the recovery is slow and painful. The market has stabilized, but at a level that has wiped out a decade of wealth for many. A new generation of buyers is emerging, more cautious, more skeptical. They prioritize affordability over extravagance. They rent for longer, save more diligently, and view homeownership not as a get-rich-quick scheme, but as a long-term commitment to shelter and community. The landscape is forever changed. The shiny new developments are gone, replaced by a focus on renovating existing homes and building smaller, more sustainable communities. The great housing correction of our story serves as a powerful cautionary tale. It reminds us that economic stability is fragile, and that the foundations we build our lives upon require prudence, foresight, and a healthy dose of realism. We must remember the lessons of the past to avoid repeating its most painful mistakes, because the dream of a home should be a source of security, not a gamble that can cost you everything. Thanks for watching our deep dive into this hypothetical scenario. If you found this thought-provoking, please hit the like button and subscribe for more content that explores the big questions shaping our world. Let us know in the comments what you think the future of housing holds. See you next time.